This video is about the price of Embassy REIT falling over the past few months. So this video is for infotainment purposes only, and please note it's not a comprehensive analysis and there is no investment advice offered whatsoever. So if you are invested, you would really like to know why it's falling, what I should do, and if you are not invested, you may still like to know because you could be tracking it. And if you are unaware of what are REITs, please visit reitspro.com and you would get plenty of information before, and our YouTube channel, before you can set out on your investment journey on REITs. So the markets have had Embassy REIT falling over the past few months, and from a peak of about 400 they are down to about 347 or 345 today. And the reason for this, why it's happening, what could be my action plan, what is my action plan, and what could be your action plan, this is what we are going to cover in today's episode. So why it's happening, there are first of all, this is a non-comprehensive explanation. There could be several factors, but we'll talk about number 1, number 2, number 3 significant factors that we feel are important for this. And why it's happening: number 1, interest rates. Now we all feel that the inverse relationship of interest rates and REITs makes these things happen. However, in an earlier video on REITs versus inflation, it's been outlined how asset prices, both land and building, go up with inflation. Secondly, the earnings of renters and owners both go up when inflation's there. And third, how the limited impact of debt with a capping of 49% by SEBI makes the impact of high interest a little limited on REITs, whereas the asset earnings play an important role, and so do asset prices. So you can watch that video on REITs versus inflation. The second thing is that interest rates have not impacted Mindspace and Brookfield in a similar way. So that's one more thing to be thought of. So if you look at these graphs here, this is Embassy REIT graph, and here we have Brookfield REIT graph, and we see that there has been no relationship as such of interest rates which has been exhibited in Brookfield as well as Mindspace. The second, number 2 reason we can probably say is the work from home culture, why it's happening. Now again, there are contradictory news and that can confuse. So there is one news here which is on August 16, which says India tells employees to return to office and IT firms take the lead, whereas the second one, which is far more recent, in September, Economic Times says office leasing hit by slowdown, WFH persistent in IT. So that's all confusing. So again, why not the same impact? If work from home happens to be there, it would happen for Brookfield and Mindspace both. So why not the same in these 3 graphs, the same trend? And why it's happening, a third possible explanation is probably more apt here. So if you see over a period of time, Embassy REIT shares have tested new lows, as it says. It's an article which says that 8.1% equity trades in block deals have happened, and they have tested new lows. This is a September 27th news. So for example, in September 22nd, the first week of September 22, a large investor sold 1 crore shares at the rate of around 352, and in the second week of the end of September, Blackstone sold about 2,650 crores worth of shares. So one possible way to look at it is that it's really bad, they're all selling, but such is the way of markets that there are some who always feel otherwise. So that's something that is probably a personal call on how things would shape up. And to reiterate that point, if they are selling, it must be bad. The sellers are sponsors, initial investors, and HNIs, but the ones who are buying are these large wealth funds. So what is my action plan and how do I connect it? So again, it's very individual, and the strategy to solve this puzzle is a set of quantitative tools and assessment criteria, and that's what I use and also share with viewers. I share my learnings with others through my books, which are these. I also have a blog on reitspro.com. Apart from that, there are one-to-one training sessions and pre-recorded sessions on reitspro.com trainings page. So that's one more way to get some insights into very unique ideas on REITs. So what would be your action plan? Again, it would depend on certain parameters and your own choices as well as your own outlooks. So but there is a certain guideline we could always have, and these are based on three main assessment criteria. Firstly, what do you feel is going to be the outlook for the Indian economy as a whole, and how would it fare? Would it grow? Would it not? The second would be your assessment of Indian commercial real estate market, because the three REITs today are into commercial real estate, office spaces mainly. So that's the second assessment. And the third assessment is that how would the stock markets, what is the role that REITs would play in the stock markets? Would they be as successful as in the markets abroad or not? So these are the three criteria one could look at, and then suit your own strategy and financial planning and understand whether REITs suit you or not. Thank you so much.